Hello everyone and welcome to the weekly educational webinar from ICM.com. My colleague Sai Mahesh and I would like to thank you for joining. Today we are talking about the Elliott wave theory and indicators by the trading expert Billy Williams. So the Elliott wave theory was developed by Ralph Nelson Elliott back in 1930s. He believed that the stock market moves in repeated patterns, and if you are able to understand these patterns, you will have better opportunities in forecasting the coming price moves. He believed that the psychology of traders will lead to certain actions in the market. So greed and fear will lead to certain directional trading, and based on this, maybe you can trace certain price patterns which could be supportive in your decision making. So his theory gained attention in 1935 when he picked the stock market bottom. So practically, what does the theory say? Market moves in waves, impulsive waves and corrective waves. Impulsive waves move with the trend and consist of 5 smaller waves, and these smaller waves consist of also smaller waves. And corrective waves, which moves against the trend and consists of 3 waves. So as you can see here in front of you, this is a similar formation of what Elliot thought. It's just a very straightforward picture for a graph. So for example, this is, let's take into consideration, this is a line chart. So he believes that the price is gonna move in two bigger waves, two big waves. Impulsive wave, which is one here, all this wave. Impulsive wave moves consists of 5 smaller waves, and another corrective wave, or a second wave which is corrective, that consists of 3 waves. So these are the waves here: 1, 2, 3, 4, 5, and ABC. So, or the 5-3 structure. So we have 5 impulsive waves and 3 corrective waves structure. So here it's very simple. The market is moving in the direction, and then we have a smaller retracement, and then we have another wave 3, and another correction for wave 3, another leg higher, or another move higher, which is wave 5, and after that we have a correction for the whole move from 1 to 5. So a correction for the whole move of the bigger wave 1, which comes in wave 2, A, B, and C. The major rules for Elliott wave theory are that the wave 2 can never retrace 100% of wave 1. So for example, this is wave 1. Wave 2 can't drop below this, since it won't mean that we are having a higher low, which is one of the main basics of Elliott wave theory. So usually wave 2 retraces a certain percentage. We'll talk about the retracements, or Elliott wave theory, and the Fibonacci retracements in a while. So this is one of the key rules. And another rule is that wave 3, or this is the bigger wave, which is wave 3, cannot be smaller or shorter than wave 1 and wave 5. So the other two small impulsive waves and the bigger impulsive wave. So let me repeat: we have 2 bigger waves, one impulsive, you can see it, 1 in Roman number, and 2 corrective wave. So for every wave up, we're gonna see a little bit of a correction or a retracement. Inside of the bigger wave up, we have smaller waves. Also, these waves are impulsive and corrective. So we have an impulsive wave, corrective wave, impulsive wave, corrective wave, and impulsive wave, and then we have corrective, bigger corrective structure, with this one being impulsive, corrective, and impulsive. So this is in brief what is the practice, or the real idea behind Elliott wave theory. Market moves in waves, and if you can make an assumption, or have a correct picking for the waves, maybe you can have a better decision making, and then this would lead to maybe better trading performance. So usually we're gonna go to the MetaTrader 4 in a while, in order to try to detect some of the or to show you how you can use Elliott wave theory. One of the downsides of Elliott wave theory is that there are a lot of opinions that they can be true. So for example, if 2 or 3 traders that know Elliott wave principle, they have a look at the same chart, each one can have has a different different perspective or a different opinion for the chart, and all of them could be true until proven. So that's one of the downsides for Elliott wave. So most of the traders not only they prefer using Elliott wave for choosing that this wave is impulsive wave, so I can take a trade and I'll be a little bit more secure since I'm moving with the trend, and also to watch out from corrective waves. So you shouldn't be waiting for long for a trade if you are in a corrective wave. That's one of the main easy uses of Elliott wave theory. So instead of going and chasing each wave alone, so choosing if this wave is 1 2, now we're gonna go for the third wave, which is one of the biggest moves. So if I caught this wave, I'm gonna be performing well. So this might be hectic for some traders, and also it might be hard to pick always uh, certain trades. So usually traders do pick wave 4 or wave 5 after noticing that we are already in wave 1. We have already passed wave 1, 2, and 3. So this is one of the easiest ways to use the Elliott wave theory. Just look for impulsive and corrective waves, and with the impulsive waves you can trade maybe a little bit more uh, confident that you are moving along with the trend instead of just maybe having different perspective on the market. So this is in a brief the Elliott wave theory. We're just going to talk about also the combinations between Elliott wave theory and the Fibonacci. So Elliott himself, he noticed that there are some mutual ground between the Fibonacci retracement and extension levels and the Elliott wave theory. So among them, wave 2 mostly retraces 61% of wave 1, which means that if the market here, let's say it's moving 100 pips up, we're going to see a retracement of 61.8 or 61.8 pips down. So this wave is going to retrace to 61.8. It can go by some cases drop to 76.4 retracement or 78.6 below before moving higher. So this is usually the norm, or typically this is the retracement of wave 2 relative to wave 1. The second one is wave 4 retraces 38.2 of wave 3. So for example, you just set the Fibonacci retracement from this point to this point, from this bottom to this top, and this correction is going to be 38.2%. So usually it's around 38.2% or 50%, not more. So this could also signify that we are in wave 4. Another one is that wave 3 ends near 161.8 extension of wave 1. So you draw the extension from the starting point to the top of wave 1. If you draw this extension, if you draw the extension for the Fibonacci here at the 161.8%, you're going to notice that that the wave 3 could end at 161.8 or at 178.6 or 161.8. So usually this could be a top for wave 3 if you are looking for a top for wave 3 and maybe to exit your trade. Also another one of the key ratios, wave 5 could typically be 61.8, 100% or 123.6 of wave 1. What does this mean? That it means that wave 1 after finishing wave 1, 2, 3, and 4 and starting in wave 5. So for example here, if we retraced already 38.2% and we're going to start wave 5 and you want to put uh, your projections for the market, you just measure the distance between the starting point and the end of wave 1, or you take the whole length of wave 1, you just put it starting from this bottom here. So it's either wave 1 will be equal to wave 3, or wave 1 will be equal to wave 5. Wave 1 will be equal to wave 5, or wave 5 will be equal to 123.6 of wave 1. So this is mainly these are mainly the top levels Fibonacci retracements if you're going to mix Elliott wave theory with Fibonacci retracements. So now we're going to go to the MetaTrader 4 platform to have like a small example about how to look at the chart and look for Elliott wave structures. So here, for example, this is the 4-hour charts on the euro dollar. So some of the traders, I'm gonna give several point of views or several opinions from which traders who understand Elliott wave can think about. So for example, we can see this structure here. The market is moving up. So some of the traders would say that this is the wave one. This was wave one. We have this is wave two. We have also here wave three, which is the longest. So we have one of the key rules met. Wave three is the longest wave, and this is a wave four correction, and this is wave five. Wave five is almost equal to wave one. So here we have wave one around 238 pips, and also we have here wave 5, it's around 180 pips, which is almost the 61.8 if you are talking about the retracements or the Fibonacci levels that we talked about a while ago between the first and the fifth wave. Also, this is the third wave, which is the longest wave. And inside these waves, you can notice that we have also the smaller waves. So like here we have 1, 2, 3, 4, and again 5. And we have also A, B, and C inside the fourth wave. So maybe these structured are formed. So some of the traders might think that this is 1, 2, 3, 4, 5, A, B, and C, and now we're starting to count again. Another trader might say that no, this is wave 1, this is wave 2, but all this is wave 3, and currently we are still in wave 4. So this might not be proven until we notice the coming rally. But what a trader can notice is that we have the impulsive waves were on the uptrend. So if maybe we have better possibilities to trade up than trade down on this pair. So these are mainly small assumptions how traders who are using Elliott wave theory might think about the market. How you can execute it is a bit hard to execute since you have to guess whether in which wave you are currently trading or which wave you are currently witnessing in the market, and based on this you just got, if the market is going up, you just need to put a stop level below the lowest point in wave 2 or in wave 4, which are these lows in this case. So this is the low, and here this is another low. So mainly this is in brief talking about the Elliott wave theory. It's a very big theory. It has a lot of opinions, and we can have many assumptions on the market based on the different on the same understanding. So this is in brief Elliott wave theory. Now Sai will talk about top indicators by Bill Williams, and at the end of the session we'll be answering your questions regarding Elliott wave or the indicators by Bill Williams. Sai?
Yeah, thanks, Wael. Hello to everyone. Hope everyone's doing good. Let's today's topic, we are move on to Bill Williams indicator. Hope most of the people who have gone through this name, it's a very familiar name. Basically, Williams is a well-known trader, or I can say author or educated with 50 years of experience, a trading experience in several markets. So he knows for his views of trading, psychological, theoretical, as well as applied many technical analysis on the market. So he sees that the market has a various dimension, and he tried to help the traders to understand a different structure, and he developed several popular indicators. So that's what we are going to see. What are the indicators he has been developed in this by the Bill Williams. So these indicators are formed like it's in a trading system, which is very easily available on the MT4 platform, which is normally applied to various markets. We can say for forex or stock markets, anything as we taken out. So if you talk about, there are different popular indicator which has been developed by him. It's the Alligator Indicator, Fractals Indicator, Market Facilitation Index, Gator Oscillator, Awesome Oscillator, and Aslet Oscillator. So there are like 6 of them are there. So today we are going to cover like the popular one, which is the Alligator Indicators, Fractals, and other MF5. 3 indicators are very popular among with this developments. So let's go on to that. So when talking about Williams Alligator Indicator, don't be scared. Alligator is just an indicator, so nothing to worry about it. And nicely, he has Williams nicely has been given the explanation through this indicator to understand the trade, get understand to the trader how exactly the we can understand to get into the market to more productive to who know. So this indicator provides useful to visual the tool to trend the initiation or trending the entry timing. That's most important things where can be limited the useful for choppy markets or trending no trend markets basically. So these markets, this market players or always the market players can always confirm by buying and selling signals. So this can be used for MACD or other trend indicators also. So when you say this Alligator indicators, the Williams, it's been used as 3 moving average. With the moving average, he has set 3 type of parameters. One we can say 5, 8, and 13. So some of the traders used to have a different parameter to have a different entry level and different way of understanding. But as a default, in this indicator, he has kept as a 5, 8, and 13 as a periods as in a moving average. So this moving average, it's like comprise the jaw, teeth, and lips of the alligator. That's what he was trying to explain, how to identify. Yes, defined in such a way to understand very easily the name like alligator. He has kept jaw, teeth, and the lips. So through that, yeah, try to explain how to get into the entry, how to exit, how the market has been moving with the trend. So that helps you to understand basically. So this indicator applies the conversion and divergence, as I said, which is normally as correlated with the moving average and MACD pattern. So which always show the conversion and divergence. So most of the traders understand how exactly the MACD is moves, like it moves with the conversion divergence to give the entry of exit and or entry of the downside and upside directions. So the same way, the indicator applies the conversion divergent relationships to build trading signals with jaw making of a slow the lowest turns and the lips making on the fastest runs. So let's see, move on to how exactly it's going to be shown. So from the chart, you can see there are 3 lines that appear here. So by default, you can change or customize your colors as you're comfortable. But here you can see there are 3 colors have been mentioned. There's one is a blue, there's a red, and there is a green actually. So I'm going to explain what are those things. So here you can see the 3 moving average comprise the jaw, the teeth, and lips of the alligator. The opening and the closing is reaction to evolving the trends and trading the range. That means whenever there is a converge diverge happens within this range of this moving average, so there is going to be a trend can be confirmed. So when you say the blue line, the jaw, which starts with the 13 bar moving average and it's been smoothened by the by 8 bars. So which normally that going to indicate the way of 13 moving average where it's going to be a blue line. So next one is a red line that starts with the 8 bar moving average, which is smoothed by a 5 bars. And again, coming to the third one, which is the green color, the green line, which is a green line, which starts with a 5 bar moving average and it's been smoothed by 3 bars basically. See, these are 3 actually. So this based on this, he has designed a tool which indicates how to define the market, how to enter into the markets. So you can see here from the charts. So it's just recent chart has been taken to understand from it. So there are 3 lines which I can see. This is a green, which is a red, and which is a blue line. So whenever you see a green which is crossing or converging, because I said this green is always a faster one and the blue one is a slower one. So when you see that there's a conversion happens and divergence happens in this place, normally there's a pressure happens in the buy side directions. Same way when it's going on against the vice versa direction, it's going to be on reversal side. So this is a basic knowledge about it. So definitely you can have a look. I mean, we can go to the MetaTrader platform. We can have apply this system. It's quite useful. Like it's one of the best indicator that have been seen in the recent time in the markets. And most of the stock traders used to have this type of alligator indicator to find a trend basically. So let's move on to the next one. It's a fractals indicator. So fractal indicators, it's also a very simple price pattern that frequently seen in the markets basically. So fractal indicators is like, it's a fraction formation of chart, marks a temporary high and the low of potential importance. That means it gives the different highs. Normally it's correlated with the major resistance and support levels of the markets. For example, you've seen number of times, we have gone through a few educational seminar previous weeks actually. We have seen support and resistance levels. So that plays a major role in this indicator. So like if you see like couple of supports or more than 3 couples type of support levels or resistance level, when there is a breakout happens, we can see a trend change in the markets. The same way, this indicator as looks like a, it's indicator usually looks at the past 5 bars. So I'm going to show you a chart here. So this is how exactly it seems. So it gives a arrow indication on both the side. It can be bullish arrows or it can be a bearish arrow. So what has been explained here? So how you have to identify this, how to use this tool to get into the markets. So in the earth, like you can see, there are bullish fractal occurs. For example, the indicator which I mentioned is a bullish fractal, which shows an arrow mark. When it occurs, there is a low point with the 2 higher low bars or candles on the each side of it. That means when you have seen it is when you see a 2 low point, I mean 2 higher points with the lower point with the low one, which means the bars are being too high. So it means that the market, the bullish indication has been mentioned there. So some traders, I mean few traders are there, we are using a different way with this concept, because the concept is same. That means that they are trying to understand that the market's going to be bullish or bearish with this indication, but still to be preferably they have to look into the different way of strategy they try to implement. Where I'm going to show something also on that. So when you come to the bearish fractal occurs, when there is a high point and with a low 2 lower high bars and candles on each side of it. So that means exactly opposite. As we see a high point with the 2 lower high bars or candles, which is either each side of this. So this up arrow marks of the location of the bearish fractal, and while the down arrow marks location as a bullish fractal. So it's very simple to identify. It's easy to get into the markets. As they are new traders or beginners, you can start using this indicators, because it gives you a lot of information about the markets ethics of the technicals. So when you see there are arrows marks are there, whenever you see the arrow marks, for example, if you take for this arrow, as I said, where there is a bullish arrow comes here, it's almost a bearish trend continues. So when you see these arrows, it completely seems a strong resistance stands there. Strong resistance breaking point has been there in the market. So obviously, when the market breaks further high in this level, so it's going to continue for the buy. So you can use it. As I said, there's few traders which also use this way to enter the market. When the breakout happens in this level, you can be on a bullish trend and you can be on a buy side calls. And still now, if it's not breaking, you can be as a seller side call. So this is how the indicator works here to get into this. This can be very perfect on any time duration, but always choose in a midterm like 3 hour, I mean 30 minutes, 1 hour, 4 hours, or more than that hours. You can able to get you good result for these indicators. So let's move on to the next one. It's a market facilitation index, which is normally we say is a mark MFX. It's one of the interesting indicator by Bill Williams. So basically the MFI measure the price change per tick and plot this histogram value of this price chart. So normally when you someone, if you are understand about the MACD, they come to know that what is histograms. We are clearly explained in the last few times before. So the bar of the histogram had been usually colored wherever the MFI is increasing or decreasing. So that's what exactly the MFI is being explained. So MFI is being explained along with the volume, the volume of the markets. So with the combination of this two, he has explained how this indicator is going to be give the direction for that. So for example, for a simple way, the MFI is made up of a very simple calculation and is been considered by some expert as a better measure of market action than the with the related RSI or stochastic and stochastic oscillator. The calculation result visualized through the histogram consists of bars with the 4 different colors. So he's very neatly explained about how exactly to identify. He has given a 4 parameters on this indicator where he's going to give the explanation on that. So let me move on to show the first chart how exactly it looks like. So when you're plotting the in this MFI index indicator from the MTATR 4, that 4 colors are being seen. There have been the 4 type of parameter to be set, which has been by inbuilt with the formulator by default formulators, which has been mentioned with the different colors. So here we have taken as a green, a brown color, a blue, and a pink color. So this is how exactly it's going to be. So that's a different name has been defined for this actually. So if you say green, it's one of the histogram green bar, which indicates that both MFI, as I said, that there's a comparison between the index and the volume, right? So since this green color indicates that the MFI and the volume are rising, that means the market is on one side direction. That means the trend is already created in the market. So this suggests that the market is already on the move, and the trader should enter the position in the same direction of the market. It's trending. That means when there is a bearish or a bullish, whatever may be, this green color appears, that the green bar appears, it indicates that market is on one side directions. So while the opposite trades should be closed. That means if you are in other side of the markets, if you are at opposite side of the market, you have to be close your position and be on the trending side. And this gives a lot of good result when you're following up with different time frames and time durations. So when you're talking about the next one, which we noticed that is a brown bar, which is a fade. This condition is visualized by the brown bar. It reflects the end of the trend. That means almost the trend has been over. The trend or the index as the volume is going to be reduced, the compressed. This is going to start the consolidation, or maybe it's going to stop the. If you are a buy side, it's going to be an overbought level, or if you are a sell side, it's going to be oversold level, which also like gives you the entry to exit. That means you have to come out from the market if you are holding the trend or you're holding any position. That means it comes with the brown bar. So when you go into the third one, which is a blue bar, which is almost a fake, they said as a fake, basically like, as I said, there's a green bar which comes with the positive, like both are in the same direction. When you fade comes with, for where to understand a clear note, you can see the tables here, which gives a clear explanation about what exactly the parameters indicates. So there are volume, there's index, right? You can see the green color, the fade, the fake, the squat. So if you see the two are on the rising side, it should be on a trend is on the markets on the trending side. When you see the fade, which is a brown bar, which is mean both are in a downside neck. That means that they are reduced the volume. There is a reduce on your MFI index. So that means you have to exit your position. When you come to the third one, the volumes are no, there are very less volume, but the trend is moving. So this cases sometimes we can say manipulation of markets, or we can say something like a market has moved abnormally, or maybe some type of news, but there's no volume. Yeah, so this is called fake. So obviously this is to understand in this way, so that you can mention to know how exactly this indicator gives, or the histographic colors are being mentioned to understand the market. The squat is nothing but exactly opposite the fake one, which is like, the volumes are there, but the market index is not moved. That means it's exactly like a different note, like which is a pink in color, which is safe. So normally traders like to go in a proper way, which I can also suggest you, like, as per in this indicator, the MFI indicators, always when there's a green color, is a clear signal for you on the trending side. So always be on the trend side, always, right? That's what always you go good in enough to get the performance of the result of your particular indicators. So when it shows when it shows a green color, obviously you'll be on the trend. When it shows a brown color, exit from the market and wait for the next entry to move on. So that's all about about these indicators. So when you say finally, if you're talking about the final thing, like Williams suggests to use most combination with MFI indicator is it's mostly with MFI as well as with the fractal indicator. That's what he suggested in few of the books he has been written on it. One of the good thing is that about this William indicator is that there are easily available to on an MT4, and which easily can get to understand it. So this is all about for today. Hope you understand. I've got some information. Thanks, Wael. Sure, I can show you some. I missed some points, like we can go how to plot the Williams indicator. When you go through the MT4 platform, you can see Bill Williams. There are 6 indicators available here. So we can just, if you go through the Alligator one, which we gone through now. So just drag it. I can show all the by default parameters are there, 13, 8, and 5. Just you can plot there. So now you can see these 3 colors of lines, which is blue, the red, and the green. So when you're going to the other one, we can let me the fractal one. So you can just plot here, and which is exactly shows you the direction arrows, which we discussed about the bullish arrows as well as the bearish arrow. So this can be plotted, and you can get through it to learn about it. So let me. So next one is the MFI index. So it's which I shown you the slides, which is a green, the bar, the brown bar, and the blue and the pink, which also are 4 important index, which gives you the combination of entries. If you give the confirmation, this can be expanded very clearly, and which gives the colors on the histogram, which gives a indication like how the market. If you see now the present one, which euro USD dollar, you can see that the trend has been confirmed here in euro. So these are exactly the indication that if you say here, the other one which gives a entry, and you can see there is a year which is a bearish trend which continue. But when the brown is come, it means that the market has been consolidated, so you have to exit your position. Some falls will be there, but definitely you have to long term. You have to understand and you have to go through completely to move on to the get to the good performance of this. All right. Thank you so much.
Everyone, if you have any questions, please write them down so we can help you. I would just like to remind you that all the opinions, analysis, news, and information mentioned in this webinar only serve for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument. Sai, there are some questions from about the alligator.
Please share the question, please, Wael.
How do I determine an uptrend or downtrend using alligator, and how do I set my entry signal?
Okay, through the alligator, right? It's asking about.
Yep.
So basically, we are discussing about the three type of lines. That means one is the 13, the 8, and the 5-bar lines, basically. So here the convergent divergence. For example, you can take the 13 and you can say the 5-bar line, or that's as the most easiest way, because the jaw and the lips, which are the top and the low, which I said there is a faster line on the blue line, on the slower line on the green line. So whenever this both are converged, and if you see the whenever you see the green line on the top level, on the highest level, so definitely the trend is going to change. That means the conversion happens. So the green line start on the upside direction and is been diverged with the downside of the blue line. So from there we can start identify that the trend is going to be changed. So there you take a call, maybe like in the bullish trend, it can be green on the upside, or maybe in the bearish trend, the green will be on downside, which is below the blue lines.
Okay, so another question. Okay, so for Elliott wave, the theory is very easy that I'm going to show you on the. So here, this is the main concept after Elliott wave, is that the market moves in certain waves, and if you can you can do a proper analysis to guess which wave we are currently in, maybe you can have better performance in trading. So maybe all the impulsive waves, they consist of 5 waves, and the corrective waves, they consist of 3 waves. So when you see almost a bottom and another bottom here, maybe we can be going for another impulsive wave also. So this is could be one of the good signals by Elliott wave theory. So mainly we have also some additions between Elliott wave and Fibonacci retracement. So here, for example, the second wave could retrace up to 61.8% from the first wave. Among key rules of the Elliott waves, that the third wave should be the longest wave and shouldn't be the shortest wave. It can't be shorter than the first wave and the fifth wave. These are the ones that I'm highlighting here. And another key rule for Elliott is that the second wave can't retrace more than 100% of one. This is the main concept. The market moves in certain waves. Some of them are impulsive and other are corrective. Impulsive waves are price moves within the trend with the same direction of the trend, and corrective waves are against the trend.
While there's one question, like you need to show the EA how to plot this MFI as well as fractals.
Okay, so if you want to use how do I make an EA expert advisor with MFI on MD4 and identify the different bars green, What do you mean in terms of how you can make it? How you can make it technically, how you can code it, or if you can just put some more clarifications on your question so I can support you. Okay, so you're asking about the ideas behind. Okay, so first let's start with the fractals. It's very easy. Fractals, they do show, for example, when you have the arrow on the top of when you have an arrow on the top of a certain candle, it means that the price on this candle, it was in the middle between two we had two candles on the left and two candles on the right with lower highs. So usually when we see this reversal, when we see this arrow, it could signal that the market could be reversing. Also, another positive, another different concept of the fractals. I'm gonna go to the platform, so I'm gonna explain it. It's gonna be much easier. So let's say I'm gonna remove here this one. I'm gonna add the fractals, and let's go for the daily chart. So here we have these fractals. So usually when you go when you go for the idea behind it, if you check an expert advisor, if you want to set an expert advisor, usually it looks for the past 5 candles, and if the high in the middle candle, so let's say 1, 2, 3, 4, 5, and it has this candle in the middle and it has the highest. So when we are in this way, when this candle closed, it signaled that the candle, this one, the one before, had a reversal signal, since it has this wick at the top here. So an EA would start selling here. So after the close of this candle, the EA would start selling here, and you have this mainly it's for scalping. So you have this much of a profit. So on the contrary, if you have on the other side also another assumption. So when we have also a reversal, this could be as a signal to buy. If we're going to look for another principle for the fractals, when the market breaks above this point, since we have the fractal here, if the market breaks above it, then you can buy here. So it is a buying signal here, and also you did benefit from these from this move higher. And also here, also here you can set a support line on this price. So when also the market dropped here, you got some good scalp in it. So this is the concept behind fractals. We have two ways of using fractals. This is for it. For the MFI, usually it is a supportive indicator. So you have to choose indicators that will help you take the signal to the market, and then the MFI would come and assist you in filtration. So when you have a green bar, this would confirm the trend. So if your indicators or your strategy suggests that you have to buy in the market, and the MFI, it shows a green bar, so you would continue in executing this trade. So these are the concepts behind MFI and fractals, and also the Elliott wave theory. Perfect. I believe this is it for today. If you have any questions, please write them as an email to there's another question. Is the MFI on MT4, and how do I access it? My first time hearing about it. So yeah, it is on MT4. If you just, as I mentioned, if you just go for indicators, Bill Williams, you have it here, market facilitation index. You just plot it here, and you have the histogram at the bottom. Okay, so market facilitation index. Perfect. So if any of you have any question related to this webinar, you can write an email to support@icm.com or webinar@icm.com, and we'll be glad to help you. Sai, any words to add?
That's great. Thank you so much for everyone.
Okay, perfect. So this is it for today. On Monday, we will have our weekly educational webinar as usual. Stay tuned till then, and thank you.